Hi guys. So we are starting a brand new webinar series at this Forex and option trading uh, academy. So as you all know, we have three stages of being a trader, right? So you need to have a strategy, then you need to trust it, then you have to have the psychology to trade, right? So everybody knows about this part, strategy. That's everything you hear, right? That's everything everyone tells you about. If you go to a mentorship or a free or a paid or whatever, that's what you hear it, right? So basically, if you're trading smart money, you have supply zones, demand zones, whatever. He just says that you should buy here, you buy it, then it goes to stop loss, right? So why? But what should be the reason? Many of the traders lack these two, right? They have a strategy, but they don't know how to trust it. Okay, so let's start with that. Trusting your edge. Sorry. So how do you start trusting your edge? So what is the first thing that you need to trust something? You need to know about it, right? So how do you know about a trading strategy? You need to have data, right? That's the first thing. You need to have data, right? How do you get these data? You get them by backtesting. That's right, backtesting, right? So when you start to backtest, is it just uh, pressing this replay button, going to somewhere, and just doing this? No, it's not. Why? That's what many of you do, right? So if you have been doing backtesting, you go to whatever the trading viewer loves. You go back to a month or so, and then you just test that month and decide whether it's profitable or not. Let's say it's profitable, you go into the live trade, and again you're losing. So what's the issue? The problem is very few of you do this part, journaling, right? When you get to journal something, let's say you take a trade on 15th August at 11:30 a.m. You journal everything. You journal whether you lost it, whether you won it, whether it hits TP, and how much it goes after hitting your TP, or whether it hit the SL, what's the trade duration, and how many pips you lost. Those kind of things, right? So let me move this here. So those kind of things, uh, you don't journal. So what is the uh, hold on, let me show you something. Um, when you journal and you plot, let's say in an Excel sheet, you plot this equity curve, right? You want your equity curve to be something like this, right? If your strategy is profitable, and you cannot decide whether a strategy is profitable or not by doing some more 2 or 3 trades or 10 trades or even 50. You have to do it for at least 100. In my opinion, if you can do 500, it's much better because more data you have, you will have more trust in your system, right? So how do you build this trust? For that, I'll have to tell you about the game of trading, right? So what is trading? It is basically hold on, somewhere in the waiting room. Okay, so once you learn Once you learn that trading is a game of probability, you're not going to, unless you learn that, you're not going to be successful. That means if you take one trade, right? Let's say you are taking a, let me go to an example and show you. Let's say you are taking a sell over here, right? You're taking a sell over here. Let's say you took a sell on this, right? You have your stop loss somewhere here. You have your take profit down there. And when the price is here, that's where you do your sell, right? So when the price is here, you are selling. Now, this is only one trade, right? So this is just another trade. So what can you predict the outcome of this? What's the probability of this going here or going there? If you just look at one trade, it's like flipping a coin, right? It's 50-50. So how do you make money in this game? You have to accept that trading is a game of probability. So why did you take this trade? Because your strategy, all the rules of your strategy match, right? So if they match, there's no guarantee that you're going to win that trade. Okay, you have to remember that. Most people don't realize this thing, right? You have to be good at having an edge, not having 100% strike rate. You can't have that. If someone says that you are getting, will give you 100% win rate, just run away from them. Don't even look back. It doesn't work like that. So what I'm going to say is, when you take one trade, right? When you take one trade, that can be either a loss or a win. Okay, forgive my bad drawing, right? So, so how do you build an edge from this? That's why you have to have backtesting. Imagine you have done this 500 times, right? You have done this 500 times. Let's say hypothetically, you have taken 500 entries. Okay, 400 and let's say 25, 125 of those are wins. Another 50 are losses. We have 25 break-even trade. Right. Now, when you have this data set and when you're taking the 501st trade, right? So what is your expectation? Will it be a win or a loss? Based on these statistics, would you care? It can be a win or it can be a loss. You have, I believe you have 425 by 500 is 85% win rate. So do you care about this one trade? Would you care about this one trade? No. It can go to SL, it can go to TP. You don't you don't care, right? Why? Because you know over the next 500 entries, you will have close to this number. You have 400 to 425 wins. So you will not worry about this one trade. So that's the main thing that you have to learn out of uh, this game of probabilities. Most people, when they start trading and when they learn a strategy, they go to back testing. They test 2 or 3 entries. All of them hit stop loss. You say, no, this strategy is not good. You're just throwing it away. Then you jump to another strategy. You buy a course. You pay hundreds of dollars to a course. You buy it. You learn it. You take first few entries. They win. You're very happy. Oh no, I'm a millionaire now. I can make money here. Then suddenly you have 2 or 3 losses in a row. So you go back to thinking that no, this doesn't work. I'll have to find another one. Then you jump to another strategy. So this is strategies hopping, right? Many people spend their time hopping strategies, right? They don't realize that it's not the strategy, it's the lack of trust, right? It's the lack of trust on your edge, right? It's not the strategy, right? You can have the best strategy in the world, and you will, if you face 2 or 3 losses in a row, you will throw it away. Why? Because you don't have this data set. If you had this data set, you know how many. Uh, let's say if you expand this, you need to have this data as well. Win streak, loss streak. Let's say your win streak is 4 trades in a row, right? Loss streak is for 3 trades in a row, whatever. Just for the sake of argument. So when you know that, will you care if you have 3 losses in a row? No. You stick to your strategy, right? You stick to your strategy. You won't change a thing, and you will find yourself going back to the winning ways. So, uh, do you know how a casino makes money, right? So when there's a casino, you play against the casino, right? You play poker or whatever. You play blackjack. You play against the casino. So they have billions of dollars worth investment on their properties. They're really beautiful and all, and still they give you money for playing. So how can they run that business model? That's because the wins of the players outshine the losses. They have a small edge, not a lot. Don't take this as uh, every 1 in 10 players win. That's not like that. They have a very small edge. I don't know the exact number, but they have a small edge. So they let that edge play out over millions of customers. Then they make money from the losing. Just like that, you have to be like the casino, right? You have to let your edge play out. Then only you will get a profitable strategy. This is not a get rich quick scheme, right? This is not something that you learn today and do it tomorrow, and next day you buy a Ferrari or a Lamborghini. That's not Forex, right? I don't know if there are anything like that, but that's not Forex, right? Forex or options or whatever trading, right? If you are a trader, you have to be patient and disciplined. Okay, so um, next up, uh, the psychology part, right? So we'll be hoping to deliver a strategy session as well in the upcoming webinars. So here we're just introducing ourselves to you. So basically, we are trying to tell you for a newcomer or someone who has been here for years or months but still hasn't been profitable. So maybe some things I say will make sense to you, and you might think, "Oh, right, this is me." Right. So, how many of you have held your trades, hoping that this will turn around? Now, let's say this chart, right? You missed the entry somewhere here, right? Let's say you bought it somewhere here. Let's say you bought it somewhere here. You bought it somewhere here, right? Now the trade is going nicely on your direction, right? You're getting profit, 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 and suddenly starts coming back. But since you saw a big number right here, let's say $1,000, $2,000, $10,000, when it comes here, it will show you like 5,000, 6,000, 7,000, right? Now you are greedy, right? You don't want to close it here. You know that this has uh, taken some liquidity or hit some point of interest, whatever, according to your strategy. Inside, you know that this is going to turn around, right? But you don't have a exit strategy, right? You're holding it on. You're holding on. You will think at least it will come here, then I will close. But what if it comes here? Will you close? No, I don't think so. You'll hold it, thinking it will go higher. So that's the psychology part. That's where fear and greed comes to trading, right? Fear and greed, right? Fear is so this works in a funny way, right? So this works in exactly the opposite way that we want it to work, right? When you are in a winning trade, you are not fearful, you are greedy, right? You're greedy. You're greedy. You're greedy. You have enough profit here. You have 1 to 10, 1 to 11, but you're not closing out. Finally, it will come down here. It will come to your original price. And once it does that, you will not keep the stop loss here. You're going to drag it down. Why? Because you were in a winning trade, you saw a lot of profit. Now you're not willing to let it go. You're not cutting your losses at the earliest, right? You are letting you let the trade run, right? You think that it's on a bullish bias. You think it will go up some way, anyway. At a single point, now you can't hold it anymore. Price is going down and down, and you are out of the market. Why? Because your account has liquidated. So that's the reality. If you haven't faced that, you haven't traded, my friend. I mean, if you haven't experienced that within your trading, you haven't traded. That's one thing, just one thing, one of many. So, what's the best thing to avoid all this? It's much simpler than you think. It's collecting data, just like what I told you here. It's about collecting data. When you have data saying that once this takes all this liquidity up here and it shows a rejection that it will go down and take the loss down here, will you hold it? Will you hold it expecting it to go up? I don't think so. Once you saw this rejection block, you will close, or maybe you will even uh, take profit around here, and you won't worry that you didn't catch the end. Trading is not about catching tops of bottoms. It's about taking whatever out of the market, whatever you expected, and getting out of there, because it's a zero sum game. Market will give you, and market will take money from you. So you take the money from the market, and you don't give it a chance to take it back. That's how it works, right? So what I was saying is, if you had 500 trades or 1,000 trades of data saying that this will come down after that, right? After your liquidity point, so that is where you should exit. Will you hold it? No, I don't think you do. So uh, even though people say that you can't trade, you are not disciplined enough, whatever, all the discipline and everything will come to you through data. Right. So this is something that I experienced myself. Once I started journaling, not the back test. We'll come to that later. So once you start journaling and seeing the results, then you build that trust, right? Then you know when to uh, come in, when to step out, and when not to trade. So that's another thing. You have to know when you should not trade, right? So in my trading plan, I know that the day of the FOMC news, that's not a good day for me to trade, right? So I don't trade until the FOMC meeting is over, right? Then the on the day and the day before non-farm payroll news. So I know the market can consolidate or will not have enough liquid volatility to move. So what's the purpose of trading? So I will not trade. Same goes to CPI. For the whole day of CPI, I will not trade. So those are the conditions that I have put upon myself that I derived from data. Right? If I didn't have data saying that NFP date is a consolidating date and it will not give good opportunities, I will try to trade. I have, and I will trade that day. Now that I have data, I will not try to trade that day and give away my hard-earned profit. What's the? I mean, does it make sense? No, right? So I'm not telling you to exactly follow what I say about not trading on certain days. That's up to you. That's up to you to collect data and uh, build up that trading plan, right? So that's why we are here. We'll in the coming webinars, we'll help you to build up your trading plan, right? So then I have some other rules, like I only allow 2% of my capital to be taken away on a day, right? Maximum 2%. So once I hit that target, I just turn my computer off and I go away. I don't be here trying to make up that 2% back. And like the market ends today, right? There's no tomorrow. I had to make it back today. I don't do that. Why? Because I have data saying that there are some bad days, right? There are some bad days for trading, and you can lose money in trading. But if you wait for the good day, you'll take something much, much bigger, right? So there are few things that you have to avoid. Large losses, FOMO. So now I'm in the psychology part, right? FOMO is fear of missing out, right? Then revenge trading. So these things are really, really, really important, right? Because what did I mean by large losses? Large losses is the same scenario that I just told you over there, right? So you just move uh, the stop loss, hoping that the trade will turn around and go at your go towards your buyers. But it will not happen. Then you will lose everything that uh, you have gained. So if you have, let's say, a risk to reward ratio of 1 to 3, so that means for every 3 trades you lose one. Okay, so you risk one and you gain three. So if you lose 3 trades, you are at break even. So what if you lose all the three and some more in one trade? That is a large loss, right? Let's say you are risking 0.5% or 1%, whatever. If you let a losing trade run to 2 or 3%, then you are basically uh, letting that trade destroy your trading. How many of you had uh, uh, scenarios like this? Like one trade destroyed all your trading. You have been uh, going well. You have been trading really well. You have been growing your account, and then suddenly one trade, one trade, and everything goes down the drain. Right. So don't let that happen. I mean, that's really, really that's basically the worst thing to do. So don't let yourself fall into that trap. All right. So then fear of missing out. You see, when you come to the chart, you see a movement that has already gone, right? Let's say the price is somewhere here. You want to enter at that moment because you think that if you lose this move, you will never get a chance. Go back to your charts, journal, and see how many trades come back after you thought it would never come back and give you the best entry possible to go short or go long, whatever, right? So if you had the data, you will not fall into FOMO as well, right? So then there's revenge trading. So you're trying to make both of these things are going, both of these go together with the same thing, right? Because if you FOMO into a trade and then you lose, then you go back to this one, revenge trading. You're angry with the market, right? You want to take all the money that it took from you. The lost money is lost, my friend. I mean, it's gone. You can't make it back. You can make new profits, but you can't make loss, right? So it's not easy as saying, right? But it's better said than done. But you have to practice your mind for that. Otherwise, you will be at the same position no matter how many courses you do, right? So how do you improve your trading? So the worst thing that a trader can do is coming to the market thinking about profits. What? So why do you trade if you don't want profits? No, profit in the sense monetary gain. If you come to the market thinking I'll make $1,000 today, I'll make $10,000 today, that's the worst approach. You can't survive with that. The best approach is coming to the market thinking that I will make no mistakes. I will make as less mistakes as I can. I will stick to my strategy. I will focus on my performance. So uh, I think all of you are looking at, I mean, watching sports now. So let's say a football player, let's say Lionel Messi. Would he come to the ground thinking that I will take goal, I will score 5 goals today? No, they come to the playground thinking that whenever the ball is with me, I will do my best to take it to the goal. So that's performance focused, right? It's not results focused. When you are results focused, you lose sight of all these, right? You lose sight of all these. You know they are there. You know it's bad for you. Still you do that. Why? Because you are looking for that profit. You're looking for that monetary gain. You're looking for that adrenaline rush. Okay. So um, another thing is when you are building this journal, you'll have to enter all your emotional comments as well. Let's say, for example, um, say uh, for this trade, right? Say the rules are met, but time is out of kill zone. Mm, let's say I took this because I already won one today. So when you write this, and when you as soon as you write this, you know that you shouldn't take this trade, right? So when you keep practicing this, it will automatically come to you that you should not take some trades, and then you will stay out of these trades. So these are just touching the surface of a much bigger uh, lesson. So when we progress through our webinars, we'll be taking you throughout the journey. I mean, first of all, so it's a journey of few steps, right? First, you need the strategy, as I told you. So we are going to uh, teach you a strategy that works, right? That works, that I trade with, and that strategy that I make money with. So I'm telling this with confidence because I do make money with this strategy, and not only the strategy, with everything that's going to follow this, right? So once you know the strategy, you're going to backtest it, right? So we'll give you guidance on how to backtest it, and how to journal it, right? Once you have a journal, you can analyze it, you can fine tune it, and you can get to the forward testing part. So what is forward testing? So forward testing is, uh, let's say like this: when you backtest, it doesn't involve any emotion, right? So let me get back to this. So let's say you're backtesting it. So when you backtest it, you can just play these candles away, right? You don't have, so every one of these candles is a 15-minute candle, right? So let's say you have a trade here from this breaker block. Let's say you have this breaker block here, and you're going to take a trade out of it. So once you see this structure breaks, right? Okay, we'll reply to that point. Okay, so you're in a backtest, you're looking for a sell, everything adds up. Now the structure is broken. Now you have to wait till it comes to this place, right? How many clicks do you need? You need few clicks, right? And it comes there, right? So actually, if you're in the live market, you would be waiting for three and 3.75 hours or 4 hours, or maybe more than that. If you're waiting from here, that's maybe a 8 hour period. So when you're backtesting, you don't get that what do you call that actual live market simulation, right? So that's why you have to. Uh, okay, I lost it. Okay, here it is. You have to do the uh, forward testing. I propose. For this, I propose you to open a brokerage account. Any broker, I mean, any good broker with a good spread, uh, and a demo account. I will not tell you to trade live. Open a trade a demo account and forward test it. How long? The best, if you can do 1 year, that's the best, because there are market cycles, there are quarterly shifts, there are some things that happens over a year. So even though you backtest it or forward test it, if you don't catch those changes in price, in the characteristics of price, you will not get a good idea of good experience on the price. So let me quickly tell you something. When this trade set up, right? I can, if you want, I can show the messages. When this trade set up, we entered. This was last Friday. We entered on this order block, right? And we had the stop loss somewhere here. And one of my students, or rather colleagues, they wanted to hold this trade until the external liquidity. But with the things that I know and the experience and that last Friday was the last day of a quarter, I told them finish it off here because it will not go much more beyond this liquidity point. So see what it did. So this took from the entry. This took 1 hour and 45 minutes. No, even this 1 hour and 30 minutes, 1.5 hours, right? From there, when I got out of the trade, from there the price just went nowhere, right? For 6 hours and 30 minutes, for the rest of the day, it went nowhere. So how do I know that price will stop here and not collapse down? That's the experience that I have gathered, right? That I can't teach you. That you will get from the experience. That you will see. Now it's the last day of September, so September is the end of the quarter, right? So you know at the end of the quarter, what will happen? Is it a good day to trade? I didn't take any trade on this day, on this Friday. Up until this point, I was not trading. I was not trading. You can see there's a good buy move, but I didn't have any movement. I mean, I didn't have any trading here. Why? Because I knew it was not safe trade. When it hit this uh, daily fair value gap and collapsed, that's only when I took the trade. So see how this news, right? How this red profile news came in and tagged me into the trade. I had my limit right over here. So let me show that to you. Maybe I do have it. Yeah, here. I think this is it. I hope it is that. No, that's the NES 100 trade. Ah, this should be it. No, no, I can find it. Sorry. So, so that's what I was saying. You have to do this thing for at least 1 year, right? So if you are coming here uh, with hopes of settling your debt or getting out of your financial troubles or whatever, you can't bring those burdens into you, right? You have to leave them somewhere. You have to find some other source of income to manage those. Otherwise, you will not succeed in this. Once you succeed in this, this can make money like nothing else. So finally, I will say this is the hardest way to make easy money. But the hardest way to make easy money. So you are maybe you are a professional. Let's say I myself is an engineer. I'm a civil engineer, so I had to spend 13 years of my life in studying at school, then another 4 years studying at the university, right? What to make uh, a, a rather decent salary, right? So when you can earn that salary in one day from doing this, why wouldn't you give it time? Right? Ask yourself, why wouldn't you give it time to make this is skill? This is a job. It's a profession. Treat it like a profession or a business or whatever. Don't treat it like a game, right? So give it time. To become a good trader with a good mentor, you'll need at least 2 years, right? With a good mentor. If you have a bad mentor or no mentor, it will take 4 or 5 years, right? So ask any successful trader how long he has been trading. They'll probably say 4 years, 5 years. 2 years is a stretch actually. If you can do it in 2 years, it's very good. Becoming consistent. You can win a trade here and there, but you can't run an account for more than 90 days. Just try it. If you can run an account for more than 90 days, you're really good. Why 90 days? It's a psychological factor. All right. So I think we'll end here to recap. We were talking about the four stages of a career of trading. How you begin? You begin by learning a strategy, then back testing it and journaling it, and then forward testing it, and again what? Again journal it. Right? You journal the forward testing asset. You journal everything. You journal your live account. You journal everything. You never stop journaling. That's how you keep up with this thing, right? So we'll dive deep into all these topics in the coming webinars. I hope you will join us. It's a free webinar, so and it's the best thing that you can hope for, a free webinar with all the real contents in it, right? So I myself is a trader for 4.5 years. I am a funded trader with many funding companies, three actually. One just went under the water. So just three. So hopefully you got something out of this, and we'll see you next time. Thank you.